So, is it really that important to separate your cost of goods and your regular overhead expenses? Yes. Cost of goods is going to be your direct cost. That is whatever you spend to get the job done. So, if you do service based or you do product or maybe you do a little bit of both, what are those direct costs associated with just getting the job done? That is your cost of goods. Your indirect cost or your overhead cost is basically everything else required to run your business. So you'll have probably some administrative payroll, rent, insurance, things like that that are not directly tied to getting the job done or getting the product out the door, but are costs associated with your business. Marketing is another big one. So, why should you separate them? Because you can run margins and ratios and really dial in and figure out what is working and what is not working in your business. For example, your cost of goods. You could be spending too much in your cost of goods, or you could not be pricing right, or it could be a combination of both. If you don't have those dialed in correctly, you won't really know where you fall. Same with overhead. Your marketing, if you throw your marketing up in cost of goods, which I definitely probably wouldn't do, you're not really going to get a true figure of how much your marketing is, what is it costing you to get customers. So that is why I think it is important to separate them. Number one, it's important just to get those expenses in and record it. I've seen business owners where they'll have an entire separate credit card not connected to the accounting, and that is a big mess because it's like, hey, you got all these expenses over here that aren't even being recorded. Getting them recorded is number one, basics. But number two, let's start segregating out these expenses and figuring out which ones are our true cost of goods and which ones are just our overhead. And then from there, we can start making decisions and dialing in and figuring out, okay, how can we get our cash flow up? How can we increase our net profits? What is costing us more money? What are things that we may not need? When you start kind of really dialing in on those expenses, you can really start figuring out your numbers and making decisions based on those numbers. Hope that helps.